I think it was doing around $150 million approximately, and earlier it's even done around $200 million. So could you tell us how do you see scaling up of this particular, this particular acquisition? For your entity, that is CEAT. This year, what kind of revenues will you recognize some part of it? And also for the next year, how do you see that ramping up? And when does it turn EPS accretive?
Right. So right now we are going into we are in the transition phase where we are trying to assimilate the whole value chain of Camso into the CEAT system. We closed the deal in September 25, and after that we are in the process of acquiring the direct handling of customers across the world and in the front end. And also we have started off a project to set up the upstream equipments, the plant that we acquired in Sri Lanka. So when this whole thing comes together, we will start handling the entire value chain from raw material buying to finished goods selling, which should happen by end of this financial year, which is FY27. So going into next financial year, we'll actually handle the whole thing ourselves. The customer end transition will happen by September 26, and the project end will happen by March 27. Till that time, our turnover, which will reflect in our books, will be a transition turnover, which means we are selling to Michelin, and Michelin is selling to the customers. Likewise, we are buying from Michelin semi-finished goods and using it in our factory. So it is a much smaller turnover in that sense for this financial year. Scaling up in FY28, we expect to go past 150 million US dollar, and from there move progressively up to the full capacity of the plant, which is 225 to 230 million US dollar. But that's only the plant. We're also investing in areas which we have not acquired by way of manufacturing capacities. We are investing in product development and manufacturing, which we should be able to sell after September 20th when the brand comes to us. So this is the story, and to answer your question, when can we expect to be EPS accretive? I think by end of FY28 or FY29 definitely.
Okay, 2029 we've got that, and from 150 to around to 200 million is gradually you'll start scaling up this business. Got it. Now this gives you a good footprint in the OHT market, which is the off-highway tires. Could you tell us what is the margin profile of this acquired entity in comparison to what CEAT has currently in this vertical, OHT?
CEAT's OHT business, barring Camso, has two components, domestic and international. The international business margin profile is similar to Camso. It is slightly lower, but much ahead of overall CEAT margin profile, which in a normal period is 40 to 42%, as you would have noticed. So it is accretive on that, the CEAT business. And Camso is marginally higher than the CEAT specialty business at this point of time.
Okay, so it's relatively higher. Got that. So there we've got, I think, a fair detail with regard to Camso. Let's understand now how things are moving on ground. I was looking at a couple of reports, and they indicated that your raw material basket could effectively move up by around 20% on a sequential basis. That is Q1 FY27 in comparison to Q4 FY26. You could correct me on that number, sir. First, with regard to the cost price increase, what kind of increase have we seen on a sequential basis?
To pass it on, it needs a price hike of around 12%, 11 to 12%. So far, we've been able to pass on about 6 to 7% in domestic aftermarket, about 5-6% in international business, and the pass-through in OEM has been low because it's an indexed pricing. So the April 1 indexed increase has been low single digits. So we expect a very high adjustment in the OEM prices on July 1st, and we still have to do about 5 to 6% price hike in both domestic aftermarket and international business, which we expect to do through June and early July.
Got it. Okay, so margins in all probability will be lower in the first half of the year in comparison to what we saw in Q4 because of this raw material price increase. So you give us a rough number, what kind of a margin contraction could we see in the first half of the fiscal? And my other question to you, Mr. Banerjee, is since you're talking about a larger price increase, could it possibly hurt demand in the second quarter once the July 1st price revision takes place?
Yeah, on the margin contraction, I agree. We don't give an exact guidance, but there is an impact, significant impact, because there's a lag in the price increase. Though we may end up increasing the price adequately, but there's always a lag, so that compresses the margin, especially in quarter one and to a certain extent in quarter two also. As far as demand is concerned, fortunately, post GST, we have seen a demand spike in quarter three, quarter four, and it continues in quarter one. So we see robust demand across categories, whether it's truck bus radials, whether it's two-wheelers, and little less so in four-wheelers. But the delta in demand has not changed vis-a-vis quarter three and quarter four. So that's robust. After 10 to 12% price hike in the second quarter of the year, we may see demand moderation because we fall off the onset of monsoon in the summer months, which is a seasonally good period for the tire industry. So we expect to see some demand moderation in quarter two.
Okay, got it. Final question, sir. We'll just try to squeeze in another one. I think international business as a percentage of a mix is closer to around 20%. But your ambition is to take it higher. Could you tell us by when? I think you wanted to constitute around a third of your total mix. If you could help us out with regard to that. And in terms of your size, on the standalone basis, I believe you're number 3 in India. Help us out with that ranking as well. Where are you all? Where were you all? And where you're headed?
So international business is margin accretive, which is why we are focusing on international business. And it's not just export what we make in India. It's as I've been mentioning, it's ground up like we cater to domestic aftermarket. So that's in the same way we cater to domestic aftermarket in Germany or Italy or the US. So ground up product development. Local sales team, moving now into gradually local warehousing, hopefully in the near future. So that's at 20%, you're right. And with the Camso acquisition, it will jump straight away to 23-24%. And over a period of 3 to 5 years, we may look at an ambitious target of 1/3 of our entire turnover coming from international business. That's a consolidated turnover. As far as rankings go, it really doesn't matter. We are focusing on our aftermarket market share. We have also started looking at market share in some key markets in Europe in specific categories where we have become significant. Significance means 1% of, let's say, 1.5% of Italy market in passenger or something like that. In domestic market, we are market leaders in two-wheeler. We aspire to be market leaders in four-wheeler in the next 3 to 5 years, and we aspire to grow our share in truck bus radial, where we are number 4 at this point of time. So that's how we see it. Whether we are number 4, 3, or 2 is a consequence of that, and it may be transient, but it will push our ranking up naturally.
We appreciate you joining in, Mr. Banerjee, giving us fair color with regard to trends on ground, your ambitions as well. We wish you and the entire team at CN